Welcome to Financial Freedom with the Flipping Flanagans, where we help real estate agents and already successful business professionals create legacy wealth through real estate. We go by the Flipping Flanagans, and we don't actually flip houses very often. When you drop the F bomb a little too often, add that to a real estate background, you get the Flipping Flanagans. We actually buy property to hold and see long-term gains protected from inflation while seeing amazing benefits from appreciation and depreciation. See you on the other side. All right. Well, we're back after quite a few weeks away. We've had a lot of exciting things happening. I just got back from Florida. I got to speak at an amazing event thanks to the Girls with Grit girls. So thank you for that opportunity. We talked about how to create a residual income of $1 million per year. So it was pretty powerful, very inspiring, and the feedback I've gotten since speaking has been absolutely amazing. So thank you to everybody who has listened to this and was a part of that opportunity. So we are actually going to be talking today about the whole market and what's going on with interest rates, because obviously that's a huge buzzword lately. Interest rates are increasing, and what does that look like? And should I hold off on buying? Should I purchase right now? And we're really here to tell you probably the complete opposite of what you think. So Brad's here with me.
Hey,
We're in the
everybody.
same spot.
I know, right? Same office, same room, same city. It's actually super fun, and it's been great to reconnect with people. We had the local real producers anniversary party yesterday, so you get to kind of collaborate face to face with people who are out there. And that's the feedback, is that there's just this objection, like, we can't buy now because of interest rates, but there were no objections when you could buy with the lower rate, even though you were going to spend way more in price than you would if you had today's rates and the asking prices or the price reductions that we have today.
Yes, exactly. So as an agent in the market, I am very active, and we have listings and we work with lots of buyers. And so I just want to recap what the last year has kind of looked like in relation to what's going on right now. So over the last year, we've had bidding wars, multiple offers, people offering, 20, 50, 100, hundreds of thousands of dollars over asking in certain markets. But for our market, we were, $20,000 to $40,000 over asking was getting almost normal. And when we look at the prices that was at, $300,000 to $400,000 homes, and then we look at the increase in interest rate and the actual payment difference, if you're offering $20,000 to $40,000 over asking and waiving inspections and waiving the appraisal, actually paying a little bit more in interest is a really, really good thing. You don't have as much competition, which is keeping prices closer to the list price. People are actually getting home inspections now. They're actually getting appraisals and being able to not have to do an appraisal gap. And people are actually doing price reductions right now. You don't just get to list your house at any as is, just as is without doing any work and getting multiple offers. You now have to actually get your house show ready. And July has always been notoriously slower month. So partner that with the interest rates is actually in my opinion, this would be a phenomenal time to get into contract. You have the opportunity to get a home inspection and actually know what you're purchasing. You have the opportunity. Actually, we just got a client into a property, an investment property for under asking, and they do get a home inspection. So many opportunities in the market right now. And
well, I mean, I would say, let's say we use a Midwestern purchase price of 300,000, and that was the list price when rates maybe are at 4%, and they're going to offer 350,000 on that because they're going 50,000 over ask to get the house, to stand out, to actually get it. Well, yes, your payment was $300 a month less, but if you're going 50,000 over the asking price, that's 166 months. That's over 10 years
10 years
worth of the freaking payment that you just dropped out of the bank account, which, you brought more money to closing to do that just in case the appraisal didn't cover that increase. And so today, now people are talking about liquidating money from their Roths and selling their securities or their investments because they have that money and they want to put it down on the house. But right now,
To bring the
even
interest rate down,
to
you're saying,
well
or
to
to bring
bring the payment
the lower,
down to
yeah.
make up for the interest increase in payment. So now you're losing money on the potential gains that you have when in all reality the longest, and you don't get the updates of this stuff all the time, but the longest life of loan at one point in time was like somewhere in the neighborhood of 5 and 6 years because of refinances and reselling and things of that nature. So you're looking at these mortgages for 30 years. I would say it'd be really hard to believe that most people are actually going to stay in these mid 5%, 5.75% loans for that full 30 years. We can now get a house with maybe a little bit of a discount. Maybe it's even in better quality because you can sneak that inspection in there and talk about the condition of the property and have the seller make some repairs. So now your overhead expense is lower there too, and all the while you're capitalizing on a time where everything that you own is continuing to increase in value just because of the cost of living increases that we're experiencing with inflation. So and the opportunities are certainly around the corner when it comes to administration changes and fighting or combating inflation. Those activities, like the Fed raising rates, which is when it's for the purpose of like stopping inflation, it means mortgage rates go down. So these last two Fed rate hikes have actually made mortgage rates better despite any headlines that you read. If you want, I'll pull up the charts and show the statistics on it. That is what happens. So
Yeah, remember that the media is out there to get you to watch it, and 90% of people are driven by fear. So if you look at that, they are going to inspire fear in order to get you to watch the news. So just be really cautious and like reach out if you see a headline or you're wondering if what you're hearing is true, because Brad and I are very, very involved in every aspect of our lives, as you guys are aware, between owning rental properties and being active in the market as far as working with buyers and sellers. Brad actively gets, finances, loans for both people who are purchasing their first home, their forever home, their second home, their third home, as well as investment products. So, and what's really interesting is obviously as people get out of the market because they are having a fear mindset around the interest rates, on the topic of investment properties, more people are actually renting right now. In fact, I should have pulled up the article, but I just got an article from the National Association of Realtors regarding the amount of people renting right now is higher than it's ever been. I think it was like something like 60%, and don't quote me on that because I don't have the article pulled up, but it was very interesting. So as you're growing, as we talk about investing and using real estate as a wealth building tool, there is no better time than right now because of people are having that, well, maybe I should rent instead of purchasing. It's not the right time. Maybe, purchase prices will come down. People have all of these things that are holding them back, which is a huge opportunity. And Brad and I always talk about utilizing when people think that it's a bad time, it's usually a good time, and vice versa. So right now, people are kind of there's a shift in the market, there's a change. I don't know what to do next. I'm a little bit worried, so I'm just going to hold still. Well, that's a time to maximize and actually, because now if you have a house that's sitting on the market a couple weeks and that person planned on, they thought their house was going to sell in an hour like it's been over the last year, they suddenly become almost more motivated than in a normal market. And all we really are in is like, we're still in a seller's market. Right. Homes are still selling aggressively fast. And even 14 days on the market is extremely, that's very, very low. So when we got in this, I got in this business, 2009, right after the crash. And it's such a different, Brad, there's much stricter guidelines to get a loan, right? I can't just call you and be like, hey, I think I make this much money. And you go, hey, here you go.
Standard loan programs, absolutely. It's the strongest financials that you've ever had to see to get into a home. Defaults are at the all-time low, and there's just plenty of opportunity out there.
excuse me, rental rates are up. So
Up
people,
one over 1% in the most latest recognized report, and 12% over 12% year over year as of the most
so
recent data. Like I read that today from the reports that were reviewed.
so it still makes sense to purchase I mean, if you compare rental to your mortgage payment for a comparable home, it's still going to be advantageous to make that purchase.
Well, in last year, 14% rents were up 14%. This year, year over year, up 12%, over 12%, 12.3%. And
And you don't, I mean, when you get into a mortgage, you're locked in other than your insurance and taxes
it
adjusting.
doesn't change. Yeah, that doesn't change.
And your rent
And
rate.
rent is 100% interest. Like, there's
Yeah.
nothing to show for it at the end of the day, unless you're renting office space and you can deduct that as a business expense. It makes it really challenging to justify renting. Not that I'm not an advocate for it, being a landlord. However, um, we always have a platform that we want people to continue to grow and be continuing to add responsibilities and increase their financial well-being. So whatever situation you're in, or any listeners are in, there's the only thing that is going to prevent you from growing is inactivity.
Mm-hmm. Absolutely. So that was really what we wanted to cover today. Is there anything else? I know you had an article. Was there anything you want to mention from the article, Brad, about the interest rates or the economy?
Just that, the recession does not necessarily correlate with home values. It actually statistically always has resulted in increased values, except for the one time when the recession was caused by the housing market being back in '08. So if you needed data and charts to support it, I can definitely support that. But at the end of the day, you're going to start seeing more headlines with the word recession in it. We've had now 2 quarters of a GDP has been at the lower levels, so we are looking at indicators that would give us or give the regulatory bodies that actually are the umpires that state when we are or aren't in a recession. It's not been announced, but so far the numbers reflect that. They're not final yet, so we're not going to hear that. But don't let that impact you thinking that there's going to be some major correction in home valuation. It just means that with the rising cost of things, employers are looking at ways to be efficient and lower their costs. So you're going to see unemployment numbers up. If you're a business that's growing, or you're going to be looking for employees, you're likely going to have that opportunity, because while we're in COVID and while there was all this demand and increase in wages, now employers are on that other side of the coin where they're like, how are we going to continue to operate efficiently? So position yourself for growth, pay attention to what's going on, and see how you can benefit from it, whether it's your regular employment, your self-employment, or your investments. So we're here. We want to be a resource.
Yes, absolutely. Reach out and let us know you're listening and what you'd like to hear us talk about. And we will talk to you next time.
Enjoy.
Thank you so much for listening to today's episode. We hope you'll hit that subscribe button to stay in touch. Also, join our Facebook group at Building Legacy Wealth Through Real Estate to find out more about what we do and what we offer. Thanks so much, and we'll see you next time.